Tariff Gap Fest. We had gap higher and lower openings all across the board. That's why I said last Friday to pare positions down, thought that we could have a dramatic opening, and that's exactly what is happening here. So let me just so I want to start covering everything here. Let me just get Twitter going. It's not what I wanted to do. I want to post it. Oh, I guess I have. Okay, so let's talk about gaps and what you do on an extreme opening like this. I did put out some trades last night with those gap higher openings. I bought cable, my three Ps, probe and partials. So I've taken partials, also sold Dixie, have taken partials, and now, you can either go with BE stops. You've taken all the stress and risk out of a dangerous trade. So let's talk about from here what we have to contend with. Okay, so here's your gap in the euro, and it is fighting its way back. So why was my trade selection cable? Because last Friday I thought I'd be able to buy a pullback to about 103 in euro. So it's a good thing I didn't, try and have FOMO and get long over the weekend. I've stepped on many landmines in my career, and people I work with have too. And that's why we teach to help you avoid those mistakes that we made, to make your journey less perilous. And, if you're loaded up and you come in the wrong way on a huge gap opening and now you're trapped and you don't know what to do, is a big difference than coming in flat and be able to react to a gap higher opening in the dollar, which gave us a bit of a decline, enough to book something, and holding half. Plus, it was at the levels, well, a little above the levels. I was thinking 109 or so. So, we're under that level. So I'm going to stay with part of the position. Something else that I talked about. So, again, euro was at 78.6, or actually lower than 78.6, while cable, look at this, right to the 61.8. So what's a stronger currency? One that's taken out 78.6 retrace, or one that holds a classic 61.8 back? So that's why I went with cable, because it wasn't as weak as the pound. You actually have a breakaway gap in euro pound. Okay, so this is going to favor long cable and short euro. When you're bullish a dollar, euro's a short, but the cable is a preferred long right now because of that. Also want to cover the Aussie, which I thought, and I've been talking about for a while, that could make new lows. We've taken it out. They're trying to bounce, but I'm not going to go with the first bounce. A little weak here. So maybe do some work. I want to see do some work. It's, not a bad day if it ends up like this, and we have a pin bar, but I have enough exposure. I'd rather be long the pound than Aussie, although Aussie, look at the glaring divergence on the daily. So, we could end up with a reversal. But, I have enough. I'm basically, short the dollar into a dollar explosion, actually made some pips on it, and we'll see if it turns into something else, and a failing rally in the dollar. For a while, I've been talking about maybe we would get a third drive in USD NOK. Still could happen. We almost got there. When you look at the RSI, when it pops up here eventually, you could see that we're not confirming. Well, we haven't made a new high yet, but I don't think we're going to take out this RSI reading. So USD no could end up being a short, maybe on a turnaround Tuesday. And now we have to address risk. Okay, so I started talking about risk. You guys know I had NVIDIA puts, I had Apple puts, I have SQQ calls. They'll be opening in a minute with a pretty good gap. So this is pretty important. Now, the worst thing that could happen for risk is that the dollar relents and gives up, which I'm not sure it's going to do today. Yields are lower. The 10 years down 4, and that's why the yen, which also could be a safe haven currency, is it looked like it was breaking out. It's pulling back. I'm still not going to short it here. We'll see what kind of rally we have in TLT. Okay, there's the opening, up about 80, acting pretty good. Maybe that was the low. Anyway, I miss trades. I miss them all the time. So let's get to some of the MAGAs here, and this is, I warned about all of these last week. There's the semiconductors retesting the lows. I talked about Bank America Friday. That's a pretty big gap. It's actually challenging an uptrend line. If it takes it out, you know, we'll be looking at 41. Bitcoin, liquidity issue. This was just a failing rally. You're not missing anything in Bitcoin. I think I'd be patient there. Amazon trying to fight its way back. Maybe it could make a new high this week. Apple following through to the downside, but maybe this can be a support level. Eventually, I'm looking for something like this from here. Meta, which was a star all last week, still is above the throwover line. You can't do anything with Meta until it's back under that 664 level. Google, still looks like Goog wants to make a push. We made new highs and we had somewhat of a divergence on the 4 hour. I believe we did on the day, on the daily. So most of the Mag 7 either are starting to head lower, or if they make new highs, they'll be without confirmation. And here's the Google chart, which, after this breakout, when they came up with their chip, it's mainly been moving sideways, and we're diverging dramatically on the daily there. So be careful with all of that. I called your attention to Microsoft that hasn't made a new high since last July and 24. And we're back at major support. It's trying to hold, but I think we could see something like this in Microsoft from here, which it's going to be lower numbers. NVIDIA cracking support here at 114, new lows for the move. It's a big trade, gap lower opening. We'll see if they could turn it. And I think that's all I'm really going to cover. S&P is what's important on this sell-off, and we are bouncing back here on the S&Ps and NASDAQ. The biggest level to me for the continuation of a move to higher levels is at 5,700 level. Just look left, okay? And we also do have some moving averages coming in at that level. So 5,700 is going to be very important to me. We'll see if we get there. That's a pretty big gap. Who's buying the dip today? Who thinks that the S&Ps are going to fill the gap? So we'll see. It's trying, but if later in the session some other negative news comes out, it could really be an ugly day. So let's see if the plunge protection team could come in and save the market. Right now, the only thing that's performing is gold, and to a lesser degree, and the bonds, which is kind of a risk-off move. Silver, to a lesser degree. We may try 32 in silver, but I still can't get crazy about it, especially if we end up having a big break where brings on margin calls and forced liquidations. If that happens, people will sell everything. Because, look, gold is up, and what do you have with most gold shares and silver shares are barely up. Well, the GDX is up now because the market's coming back. But if we have a serious sell-off, in S&Ps like the 5,700 or lower, the shares and almost everything will come off out of the pressure of people needing to raise cash. So I'll see you in the room. This is where we post. Okay, so here's Van Eck Gold Miners. I would say that we've reached retracement levels. And when it comes to gold, it may have another 40 bucks in it, but I think we're getting very long in the tooth here. People talking $5,000 gold. There's some RSI indications that, we're beginning to diverge, really running slow here today, that we're not confirming at new highs. So anyway, I'll cover it next time, but be careful with your gold and getting overly aggressive. I think we could rally maybe another $30-40. Silver maybe another 50, but I think the metals might get caught up in some type of liquidation break down the road there as well. Remember, don't just count your pips, count your blessings. Good hunting. And if this kind of action bothers you, I advise you get used to it and learn to take it when you have it, and don't put yourself in a position of having to sit through a big opening. So there's gold. It is diverging a bit on the daily, but the weekly, which is important, although it doesn't give you any short-term ideas, just check that out. So, I mean, we were confirming with momentum back last fall over at 80. And here we are at new highs, barely at 70. So this is 5. We'll see what happens in the gold. But you never go broke taking a profit, at least some. Okay? That's a wrap, everyone. See you in the room. Also, I have a great guest Wednesday. Jim Carroll, the VIXologist, will be talking about how he uses the VIX in determining portfolio positions. It's a science, and Jim's one of the best. See everyone tomorrow.